Rick Mishkin, you, Peter Hooper, and Amir Sufi a number of years ago, 2-3 years ago, talked about a monetary policy, a Federal Reserve, a Phillips curve that was hibernating. Is our traditional monetary policy hibernating and someday we'll get back to it? Or are we moving on to some form of new paradigm?
So I think you're right. We're hibernating. That the Fed, I think, very well may be behind the curve. That they had basically two elements here, which is one is that they've gone to this average inflation target, which I actually think is a good thing, but haven't defined it well enough to actually anchor expectations the way they should. So I think that's a problem. But the other is that they basically have said that the Phillips curve is not something they're particularly worried about. But on the other hand, I think they will find out that it is hibernating and that there is an issue. And I think that the Fed will actually end up doing what it has to do, but it may be a little bit late. So I don't think that it's so much that I think that they're going to be mugged by reality. I think that's what's going to happen here. Unfortunately, I think that they may be a little bit too complacent about the fact that the economy is running very hot, that inflation, I think, is going to be less temporary than they think it is. It's true that there is a supply shock, which is temporary. But the real reality here is just demand is really jumped a lot because of very expansionary fiscal policy and pent-up demand because most Americans are financially much better off than they were before the pandemic, and they have been able to spend.
Rick, every data point we look at in the American economy over the last 6 months, year to date, call it the last 7 months since the end of last year, has improved. With the exception of the participation rate in the labour market, how complicated do you think that is? Does that complicate things for the Fed, that this participation rate has just flattened out?
Well, I think it's a surprise from what typically happened before the pandemic. But, we have a situation where a lot of people are basically wondering whether they want to go back to work the same way after the shift in terms of work at home. And so it does complicate things in terms of deciding how tight the labor market is. I think the labor market is a little bit tighter than it used to be, that 3.5% unemployment looked like some of the natural rate of unemployment. It may be somewhat higher in this case. So it is complicating things, but not in a way that they can't figure out. So I think as soon as, I think a key issue here is a central bank never should take its eye off the inflation ball. And inflation has been very high. And if it's not as temporary as the Fed thinks it's going to be, they need to move and move relatively fast at that point.
Are they already too late, though, Rick?
I think they may be a little bit behind the curve. So, the issue is that in some sense, there is a little concern about deja vu all over again in terms of the 60s, where the Fed was in a very similar situation, very accommodating monetary policy with very expansionary fiscal policy. I don't think we're going back to the 60s, but I think that they're a little bit behind the curve here. And so that it's going to be more costly for them to get inflation under control. And that's added to the fact that I think they haven't managed their new monetary policy strategy as well as they could. And as a result, inflation expectations may not be anchored as well as they should be.